The Cash Flow Code. And my guest today is Corey Gaiman, and he is the president and owner of JCG CPA firm, and he has a book. Um, nope, actually, he doesn't. He
Don't have a book
focuses
yet.
on establishing common ground with other entrepreneurs and business owners. But we're going to start off talking about common accounting mistakes that small businesses make because they only make about 10,000 of them. So let's bring Corey on and we'll start the conversation. Hey, Corey, how are you today?
Oh, great, Josh. Thanks for having me. Appreciate it.
My pleasure. And sorry we got started a little bit late today, but sometimes those tech glitches just get in the way.
That's that's right.
So tell me, if you're coaching a business owner, what's the first thing that you look at to see if they're making a mistake?
Well, you look to see if they have books. That's kind of the first thing that we look into when we pull on a new client or we have someone say, "I just want to start a business." Okay, do you know what books are? We start there, and if they can balance their checkbook and if they can get things in order that way, we can usually start from that ground level and move forward.
Okay, so they have books. Let's say that somebody's been in
Right.
business for 5 or 6 years. They
There
probably
you go.
even filed a tax return or two along the way. What do you help those folks with? Because most of the people listening to this podcast are not brand new businesses. They've been around for a week or two.
Very good. So, what is a profit and loss? What is a balance sheet? And then we work with them on their expenses. Try to get to industry standards. Try to make sure they're reconciling their balance sheet correctly. A lot of times, items will get double entered and they'll sit in that bank reconciliation for a long time, and most business owners don't notice that or they don't see it. So, if we're able to walk through their balance sheet with them, tie out their accounts, get their profit and loss statement and work down it, make sure the numbers make sense, what they're expected, or maybe they're out of line and they need some attention.
So, if one thing that almost all business owners experience at some point is an embezzlement.
Hmm.
I had several in my life. I was in the cash business, so that sort of comes with the territory.
Right.
But what do you tell your business owner clients to help them avoid embezzlement?
Well, you touched on an important part there. Some businesses can't avoid cash, but if possible, avoid cash at all costs as far as expenses and handling throughout the office. Cash is the most untraceable part of the transactions that we run into. Many small businesses, especially that run around and do their own, buying of expenses, they want to use cash. Well, very hard to track, very hard to prove. And if you leave cash for employees and suddenly that employee is frustrated with you, suddenly your cash might be missing. That's the number one thing I always say: no cash if possible. Obviously, for income, accept all the money you can. So we will accept cash just fine, but we got to control it from as soon as it comes in the door all the way to the bank.
So, what are some things you can do to control your cash or control especially your income? I mean, it could be checks, it could be
Hmm.
cash, it could be
Hmm.
credit cards. There's lots of ways of stealing money. So, what do you recommend to people
Right.
that they do to audit to make sure that they don't get embezzled?
So it starts with a good paper trail. As soon as that cash is brought in, record of that receipt on the books, an actual paper receipt given to the customer, a paper receipt copy held there. And then from there, hopefully you have some sort of safe, you have some sort of way to protect it while it's in house. And then a daily deposit, especially if it's cash. And of
Well,
course,
what
a
about,
good level of trust with your employees is always important.
well, that's nice, but I sometimes have had high trust and they still
That's
steal.
true. That's true.
So, so how would you go about doing a daily reconciliation for cash that comes in versus cash that goes to the bank?
Sure. So cash that comes in, you want to keep that on some sort of log or some sort of receipts. You want to get it straight into the books right away. We receive payments on a daily basis of some sort, and try to make sure that every single dollar that came in is written down immediately that day, It's put on the deposit slip that day, goes to the bank that day. Of course, there'll be some left, and you want to control that as well for change for the next day. But you just keeping that paper trail from the start to the finish is the most important part. And
Okay,
another thing to add to
go ahead.
that, don't use that cash to pay for expenses during the day. Attempt to get that money straight to the bank so it matches your sales receipts.
Yeah, I don't understand why people would pay in cash anyhow. They should be
Mm,
paying by
I
check
know. I
or
completely
credit
agree.
card. So what
Much
happens
easier.
if, yeah, what happens if you get paid in cash
Hmm.
and instead of the employee, giving a receipt or signing a receipt, they just stick the money in the
Hmm.
cash register, and then an
Hmm.
hour later they go and they open the cash register and they stick it in their pocket. And how
Yeah.
would you ever find that out?
So it depends on the business, of course. If it's a service business, surely there was a ticket somewhere that needs paid, that would need reconciled back from the daily deposits. If it's a retail business, unfortunately, it's pretty easy to do if they didn't run the register. I mean, then you're talking about having a good security system, having a good camera system. Uh, an inventory count is going to be the best way to catch that at the end of the day, but that's can be cumbersome and not a daily job. So there are just all these little procedures we can put in place that hopefully add up to a good line of cash from the customer to the bank.
So if I was going to be nefarious and just do that, um, it might be a good idea to check your register every day to see how
Absolutely.
many no sale rings go in there.
Absolutely.
And if there's more than one or two, you can be pretty sure you may have an embezzlement problem.
That's right. Then you check the tape. Hopefully you've got a security camera pointed right at that register in every register there is.
Yeah, that's something new these days, or
Right.
relatively new anyhow. How about people who, and this is where it gets to be a bigger problem, you have a bookkeeper who you really trust, and the bookkeeper is really good, and the
Hmm.
bookkeeper decides they're going to start writing checks to themselves. How do you protect against that? And that
Yep.
happens way more often than people think.
It does, and write it to themselves or write it to a fake vendor that they create up. That's another common way to do that. That is where the bookkeeper is. There's a segregation of duties there. Hopefully, a lot of times these small businesses just have one, and that is a prime candidate for embezzlement. But if you have multiple bookkeepers, someone is handling the check writing, someone else is handling the bank reconciliation. This is called segregation of duties. Someone else is tying the vendor payables to the checks that were written. If those if that segregation is able to happen and then the CFO or the owner is involved in the final review, hopefully gets caught in that process. But the bookkeepers can be very nefarious and smart, and they can be clever, and they know how the system would work.
So there's one thing that I had a bunch of embezzlements, or not a
Mm-hmm.
bunch. I had a couple of embezzlements and a bunch of theft,
Mm-hmm.
but the embezzlements, what my accountants finally said, and I don't know why they didn't tell me this before I had the embezzlement, was that you really need to open your own bank statements up and look at
Mm-hmm.
all the
That's right.
checks and the reconciliation and see if anything looks out of sorts. And if you do, you need to investigate that.
That's right, for sure. And that's where the CFO or the owner needs to be involved at least once in a while, even if it's a monthly basis. You could have losses by then by someone, but even if it's on a monthly basis, get in there and just get a quick review. Make sure you recognize all the vendors.
Let's talk about the psychology of a thief for a minute.
Okay.
Because this is something I think is really important for folks. I don't think I've ever heard of any embezzlement happen in a business where the embezzler started off at $10,000 a month.
That's
They
right.
tend to start off small. And it's really important for you to have a limit of some sort, especially if you're in the cash
Hmm.
business, of
Right.
how much you're going to let people steal before you're going to start looking under the hood.
That's right. That's right. And so what what you're putting limits on their spending, you're putting limits on their check writing ability. Of course, when we're talking about someone that is nefarious, they're going to try to find ways to stay under those, to get away with those. So thoroughly reviewing and seeing the ones that stand out. You're right. It's going to be $100. It's going to be $97.26. It's not going to stand out if they've done it before or if they have figured out the system.
And if they don't get caught, you can be sure they're going to move it up and up and up until they
That's
get to
right.
the point
That's
where they're going
right.
to get caught because thieves aren't very smart.
That's right. But sometimes they are, and sometimes that's bad too. There's the psychology you were talking about. Sometimes they're actually good people, and they complete that fraud triangle of the need that they have, the justification, and then the means. And if they can justify it to themselves, oh, I'm going to pay it back, I'm going to pay it back, but then suddenly it gets out of control. Occasionally that can happen, and then you're down the road too far.
So let's switch. I think we've done enough on theft for the time
Sure.
being. I don't want to depress people too much here.
That's right.
So how do you streamline your bookkeeping and accounting process?
Yeah, so again, it depends on the size of the client. Most of the clients that we see are small to medium sized clients. And the best relationships that we have developed are where they have a bookkeeper or a couple bookkeepers in house, and we're able to work with them on a monthly basis or quarterly basis for their financial statements or their closing process. But it that has been a very efficient process with the clients that we work with. Now, if everything is done in house, to keep it efficient and streamlined, almost kind of goes against what we were just talking about with the segregation of duties. But if an owner's doing it or someone that's trusted is doing it, they get the checks in, they get the checks out. However, in today's world, many things are done electronically. Downloads are happening from bank accounts directly into our QuickBooks. Connections and integrations are happening, which make everything much, much more efficient. And everybody's utilizing these virtual style procedures that really push things along faster.
So that's great. So would you recommend, where do you recommend the interface comes between the bookkeeping department and the CPA firm?
So, do you mean interface as in the technology, or do you mean?
No, as in you're working together.
Yeah, so it's really a great collaboration to work that way. It usually saves the small business some money without having to hire a high level employee. And the way it would work is that bookkeeping department generally will put together the day-to-day transactions and keep the books in house, and they'll even work with their owner occasionally to make sure he's agrees with what they've done, and then they communicate with us or a CPA firm like us using an online portal. We've tried to get away from email; it's less secure to transfer documents or sharing an online accounting system, QuickBooks Online or Xero or others that have become very popular right now. We can actually just jump in and we can log in to the same system they are. We can even get in with them and work with them at the same time if they are stuck on something. That seems to be the best process right now. Used to be you would transfer files, you would get a flash drive or a CD even. Those days generally are gone, but some clients still want to work that way, and we still try to accommodate.
Yeah, yeah, that's for sure. So you mentioned two statements, but you didn't mention the third statement, which is the one that I think is the really, really important statement because small privately held businesses do not run on profit, although profit's
Hmm.
important. They run
True.
on cash.
Cash flow.
And if you have a business where you have inventory that moves around or you buy a lot of equipment that has to be depreciated or you're
Right. Right.
changing with receivables or payables are all over the place, you may not know it, but you could have a profitable business that goes into
Hmm.
bankruptcy because they run out of cash.
You're right. And I hear it every year. In my state, it's usually, why do I have to pay taxes? I didn't make any money. There's no money in the bank. Well, you spent it, you paid down your loans, you bought equipment. That's what you've done. So that cash flow statement is extremely beneficial in showing you where your cash went and understanding what you did. So obviously, like you said, equipment, depreciation, some of these are non-cash items that are non-expense items that do affect your cash or vice versa. And so the cash flow statement, while important, extremely difficult to explain to a client usually, but we try to just get it down to the basic terms. You paid off principal, so that's not on the P&L. You bought some equipment, so that might not be on the P&L depending on how you depreciated it. All these different ways to go, but if we can help them to reconcile in their mind why their cash balance is the way it is versus what profit they have or don't have, that's the best way they can understand their business and make the best decisions.
So the reason the cash flow statement, at least in my experience, is so difficult to understand is that negatives are really positives and positives are
Right.
really negatives a lot.
Right.
So what I ask CPAs to do for their clients, if they're working with a CPA closely, or even their bookkeeper, is to actually recast the cash flow statement in English, which I do not understand why these accounting systems, especially
Mhm.
the QuickBooks and the Zeros, don't do, because I'm going to say that at least 90% of the people that use those systems cannot read a cash flow statement and have no idea what it is. So do you ever think about
Right.
doing that?
Yeah, I've reordered it, and I've re changed the terms like you said, because you're right, a positive is a negative. Usually for us CPAs, that we had this basis of knowledge and we got it hammered into us in school. It clicks with us, but I understand that has to be translated to someone that doesn't have that base of understanding. So I've attempted to, you're right, put it in more plain English so that it can be more easily understandable and just come up with a new sort of statement, even if it's not exactly what the book told us to put in there. Something that makes sense and is useful for our client.
Yeah, the problem is that accounting systems are not set up for business owners to run their businesses effectively.
Right.
They're set up for the taxing authorities to understand what you're doing.
That's right. That's right.
And I would like to see a little bit more of the former and a little bit less of the latter, but that's just me. Uh,
You're right. You're right. And the large businesses that are publicly traded, that's generally who those statements were designed for. Many times I work with some nonprofits as well, and they want to be more on a budgetary basis. So really try to make it make sense, because that's the whole point of these statements, is to be helpful so that they can make better decisions to run their business.
right. So one of the things we often encourage people we work with or folks I talk to is to not only look at their financial statements, but also have a dashboard that actually helps them predict what's going to happen in the future. Do
Right.
you help your customers set up dashboards often?
So many customers that we work with already have something like that, and we've worked with them, and we've helped them to make sure the pertinent information they need is up there. A lot of times, QuickBooks Online or the other programs that we're using have something integrated that will be helpful or have the big important information right there for them to see right away every day. So yes, we work with them for sure. Haven't built one from scratch necessarily, but we've worked with our clients that way.
So, what kind of things do you think are important to have on a dashboard?
So if we're talking about the day-to-day operations, which is what I would expect the dashboard to be most beneficial for, we're talking about literally the cash balance in the bank, because regardless of profit or loss, you still got to have money in the bank to cover payroll that week. I would like to know what your sales were for this week or the previous day or whatever is most relevant to that business. But some sense of where our sales are right now. Am I starting to see some trends or not see some trends? Um, those sorts of things, that I think those are the two most important. And then you can go from there on a client basis.
Yeah, we often, we like to see 13 period rolling dashboards, mostly
Hmm.
week, and
Hmm.
then we'll have some stuff on a 13-month rolling dashboard so we can be
Right.
taking a look at it. And daily, I rarely find is useful unless you're underwater sucking air, and you're
Right.
trying to figure out who you're going to pay today and not pay today.
Right.
It's a
Right. Right.
position I unfortunately was in, and I had a daily dashboard for that. But
Yeah. Yeah.
most businesses are better off than we were at that point.
Right.
The other thing that I think is really important for folks is, especially if you're in a production business of some sort, like construction or manufacturing,
Mm-hmm. Mm-hmm.
is what's your backlog? Because if your
Right.
backlog is going up, that can be great until you get to a certain point, and then it's not
Right.
so great. And
Right.
if your backlog is going down, that usually means you've got problems coming down. But if you're doing this over a long period of time, you can spot it early enough so you can do something about it.
Right. Right. And do something and plan for it and be ready with the personnel and how much resource you need to deploy once it gets there. You don't want
Right.
to be over labor or under.
Yeah. And, for example, you also put in sales strategies. In other words, how many
Right.
sales calls is the salesperson making? How many proposals are they making?
Absolutely.
What's the dollar
Absolutely.
value? What's the closing ratio? Are they closing 10% or 70% of their sales? And
Right.
if it's
And
10%, what are you going to do?
yeah, and for a salesperson, that immediate feedback is really relevant for them and keeps them motivated as well.
You would hope so.
You hope so.
Sometimes it doesn't do all that much, but sometimes it does.
Right.
So, if you were to give some final advice to a private business owner listening to this podcast, what would you tell them?
I would tell them to develop a good relationship with some sort of accounting system. And I know it sounds weird having a relationship with a system, but what I mean is your in-house system, does it work? Do you have a relationship with an outside CPA? Are you large enough that you have a good CFO you can trust? The system is so important, and with young clients in particular, or new clients, new businesses, a lot of times we get pushed to the side. The accounting thought process just gets pushed to the side because they're good at their business. They just jump in and start making money. Just make sure your accounting system is sound, and like alluding back to our forensics, we need to make sure we trust the people that are working on it, and we need to make sure you're involved. Don't just let someone fully run the system for you. Make sure you're involved and have a good line of communication with your CPA.
And pay your taxes.
Oh, absolutely. That's a given.
I can tell you that you can get lots of debt forgiven, but you're not going to get your taxes forgiven.
That's correct. It will keep coming.
They will keep coming. So, Corey, how are people, we're unfortunately out of time, and how would people find you if they wanted to do so?
Yeah, I appreciate you being on here today, and I appreciate you bearing with us on the technological difficulties. But we have a website at jcgcpafirm.com. We have multiple phone numbers you could call. Actually, have multiple offices, and we try to give that local feel and that personable feel, but also be available to work with clients anywhere. We have clients all over the country. We also have a Facebook page you can check out at JCG Firm, and you'll see our logo on there. Got on my shirt here to show. Um, we have really tried to bridge this gap between that local person that you have to walk into their office and they have to be sitting there and they have to always be available, to more of a we can be available digitally, we can be available whenever you need, but we can be available all across the country. We're setting up just meetings just like this that you and I are doing, where we can talk with clients, work through their situations, and provide solutions.
Cool. And I've got two things I'd like you to do, and I've been asking you to do this for like forever, so I'll ask once again. The first is
Sure.
please go to wherever you're listening to this podcast. If it's Apple, go to Apple Podcasts. If it's Spotify, go to Spotify. If it's Amazon, go to Amazon. And leave us an honest rating and review. It's really important to have that done because it helps people find the show, and folks tell me they kind of like the show. And the second thing is that we have a program we've been doing for a while. It's one of our entry programs, and it's called the Financial Freedom Accelerator. Now, the truth is, you as a business owner probably think your business is going to get you to the retirement. I hate to give you some bad news. Unless you're in the top 1/10 of 1% of business in the country, It's not. You're going to have to do other stuff. So, the Financial Freedom Accelerator is designed to help you become financially free from your business. It's really easy to learn more about. You go to www.sustainablebusiness.co/freedom. That's www.sustainablebusiness.co/freedom. Read about the Financial Freedom Accelerator. If you find it interesting, you want to learn more and see if you qualify, click on the button that says time to talk with me. So this is Josh Patrick. We're with Corey Gaiman. You're at Cracking the Cash Flow Code. Thanks a lot for stopping by. I hope to see you back here really soon.